So we finally saw that cup and handle breakout from the Sunday video, which, by the way, if you are new here, we share videos every single Sunday as well as Wednesday, so feel free to subscribe below. We did have that breakout above, as you can see here, after a very large gap up to start today, and we actually had some form of a double bottom down here before it continued to the upside. What's very critical right now is we're back within this red range. If you guys have been watching the videos for a while, you know this 50-point range in between 4,450 and 4,500 is one of the strongest ranges of the entire market, at least between now and around 2020, that time period. So that means because we're going up into it, it's going to act as a hard resistance, which we've seen twice now. We saw it over here before this minor pullback back to the low 4,300s, and then over here for the handle formation of the cup and handle. And now we're breaking out up into the top of this range. So my expectation here is there will be a little bit more upside into the end of the week, although you do have to be very careful because the time to take a long position was back here when we were referencing this cup and handle pattern, because right now it is overextended, especially the fact that it is within this red range. You would not like to add some form of a long position, it being this high, especially because it's the high of year now. So because we know that this is a hard resistance, best to wait on a setup. Ideally see a crack above this 4,500 level for some type of a tactical short entry. Until then, probably not the best idea unless it was able to fall back down, that you can take some type of a short-term long position. Right now, it's right in the middle of this range. So personally, I'm unbiased for it at the moment. I'd like it to finish off the week and we could have some weekly candle confirmation before making another move on the S&P 500. What I am interested in is Tesla. I talked about this in the last video as well, and I referenced this trend line right here, which is a downward trend line that goes all the way back to the all-time high. I shared this in the Sunday video, as you can see here, from the all-time high pivot. If you scroll in on the daily chart, we did retest it just on Monday and Tuesday of this week. We retested a little bit below it, but it still closed right on this trend line, and then we had a gap up today. It still seems like there's a lot of excess weight, because what's interesting about this, just to dissect the price action here, as you can see in the 15-minute chart, we actually gapped up with the market above this 274 level. I referenced both the 274 level as well as the downward trend line from all-time highs in the last video, and what's key about this gap up is it was unable to hold within the first 15-minute candle, and then after that it stayed below for the rest of the day, which shows weakness. The fact that it was able to gap up above a key level like 274.05 in this case, but it was unable to hold within the first 50 minutes. It wasn't even like the first hourly or second hourly candle. It was within the first 50 minutes that we had a large sell to bring price back down below. Means that there's a lot of sell pressure above this level, and it's going to take at the very least a lot more time until it can take another shot at breaking above this level. And by a lot of time, I just mean until next week. That also isn't guaranteed either. Because of this weakness, you could see even more downside afterwards, because we did get that initial bounce from this downward trend line, but we didn't see any form of continuation here. So right now it's in a neutral range under the 274 level, and then above roughly the 270 level of this downward trend line. It's in a neutral range. If it goes below here, then I would have a bearish bias going forward, especially into the end of July. Otherwise, if it's able to get back above here, then you're looking at more of a short-term bullish bias until seasonality can shift to the more bearish side, which would be around that August and mostly September time range. So that's just an update here on Tesla for you guys. Again, looking for a break above or below to give us a trading bias on this ticker. Another thing I want to look at here is the Dow Jones. I haven't talked about this one recently, but because the dollar has just been hammered, especially from this past week, the Dow has seen a lot of strength, along with, of course, the market's strength recently, but we did have a double bottom over here before it continued the upside. It's actually forming some form of a W pattern. So we have a W right here. Typically, you'll either see it continue straight up without any form of a pullback for a breakout, or it'll retest right around this 34,166 level, which is our previous channel. And off of this retest, it will provide the best possible risk reward for a long position, because if it does retest here, you could just cut with a daily close below this level back into the channel. That would be your risk. Otherwise, you're able to hold it for a very long time. I'd say even up until 35,000 here on the Dow. Again, it's looking fairly strong right now. We have a bullish pattern here on the daily chart. The dollar as well, like I just said, is showing a lot of weakness, and I'll show you it really quickly here. You can see we rejected my yellow trend line up around this level, as well as the 103.6 level for the dollar, and it had a hard rejection down. We're actually getting very close to a key demand level on the weekly. This is a key demand range just based on previous previous bounces around this level. Of course, it is a arbitrary whole number of 100. That's the 100 level. So that is going to have implications, as well as this trend line, which I derived from a very long time ago. I'll actually scroll back here so you can see, but it goes all the way back to the dot-com bubble right around that time period. And you can start it from 2001, goes down across to this 2002 high pivot, and then also goes to this high pivot here in 2020 before we had that crash in equities. And then we broke out of it over here in 2022, and that helped to fuel a lot more market weakness, specifically in industrials like the Dow. And now we're going to retest it for the first time after this breakout. One could also argue that this was a retest right around this range. It wasn't an exact retest, but still was a breakout and then a retest and then another breakout afterwards. But this will be the first decisive retest after breaking out for a very long time. It's been well over a year since this level has been retested. So I'm very interested to see what happens around this range, and what this will likely do, at least in the very short term, is it will provide some form of a pullback in the Dow Jones, as well as potentially the market, because it's very likely going to bounce off of a retest of this level. I just find it very unlikely that it would not bounce off here, just because it's been a very long time. So do watch for that. And of course, if we did get that retest, going back here to the Dow, we know that there's a potential long setup in terms of good risk reward. If we do get a nice curl over here around the 34,100 range off of this W setup before further upside. So if you have another down day for the dollar tomorrow as well as Friday, and that finally brings it to the yellow trend line, then we can see a slight bid in the dollar, potential pullback here in the Dow, and then a possible setup will emerge, and that is a very good risk reward setup. So I will let you guys know if I do find that here, and it will be pretty soon as well, whether it be the end of this week or next week. I am watching for that. Also, something else to talk about, we saw $5.1 billion dark pool print at 442.52 on SPY. We've been looking at a ton of premium in the dark pools now for about 3-4 months or so. Just a very unusual amount of premium as we've continued to grind up, and 5 billion is no small print. So do watch this, as well as the 442.52 level, and I'll just mark it here on this SPY chart so you can see the prints from this week visually, because it is likely we will retest it in the near-term future, whether it is soon or it's around that bearish seasonality period of August to September. But we had 442.52 up here, so roughly around this range. And then also, if we go back to the previous days on Tuesday and Monday, we can see that Tuesday had 1.7 billion, so nothing too incredible on that. That's at the 439.55 level. And then Monday also had a decent amount of premium. That was 3.7 billion at the 438.49 level. So price is above all three of these prints so far this week, and there's a lot of premium to back each of those prints. One thing to note with this 442.52 level, this was right about the closing price of yesterday. So if we do get a retest of around this level, like roughly the 442.50 level in the future, and this will act as some form of an initial support. Doesn't mean that we can't fall below it, but if you are an intraday scalper, intraday day trader, even a potential swing setup, permitting a structure, of course, then you could take a long position, again, whether it be intraday or overnight. As always, have good risk mitigation tactics. For example, if we had a retest of roughly this 442.50 level, then an hourly close below would negate it, and then you'd cut as a stop. Otherwise, you can let the runners run and continue to the upside off of a bounce, but that's just a trade setup idea for the future. Again, we still are amidst that cup and handle breakout. We could have some more upside here. Of course, err on the side of caution because we're in a heavy supply zone, but we are still breaking out, especially on the S&P 500. And then lastly, just to reiterate here on Tesla, we're in the neutral zone. So in terms of a trade setup, looking for bearish bias below roughly 270. If we get back below this line, because there is a lot of weight from today, the market closed green and Tesla was unable to. Tech has kind of been lagging in comparison to the S&P 500, but watch for a break in either end. An hourly confirmation signal is going to be your best friend here, as well as on SPY, if we do get that retest of around this 442.50 range in the future for a possible long position, as long as price can remain above that level. Otherwise, though, as always, appreciate you guys watching this video, and I'll see you guys next time on Sunday.